In today's video, I'm going to talk about how to safely short one of the strongest stocks in the market without blowing up your trading account. Hi, I'm Steven Spencer. I'm a partner at SMB Capital. We are a proprietary trading firm in New York City where we trade stocks, futures, and options. As short-term traders, we have the luxury of trading stocks in both directions on a daily basis. Often, experienced market participants will admonish you to follow the trend, but this advice is often misunderstood. Follow the trend, yes, but in the time frame in which you are placing a trade. So Nvidia is on a very strong multi-month uptrend, but quite often on an intraday perspective, it will have very clear downtrends. And it's our job as traders to identify the times and prices to trade those moves. So let's take a look at the recent price action in Nvidia and why it's set up for a potential short trade today. And we'll also look at a few factors a trader on our desk used for confirmation of the short trade. So every morning we have a morning game plan sheet. There is two sections. The first section for stocks in play with a fresh news catalyst. The second section for technical setups and second day trades. These are very high probability setups because we've already observed trading on the prior trading days to establish support and resistance areas that can be used for trade on this particular day. So coming into today, NVDA, Nvidia made it onto second day and technical setups because what we've seen recently in the price action is that when it establishes a resistance level on different days, it will have $10, $15, $20 pullbacks, which are nice setups from an intraday perspective. So as I said at the top of the video, Nvidia is one of the strongest stocks in the market. And you can see that by looking at the daily chart, where it basically over the last couple of months had a gap above 140 and started a trend from 140 all the way up to around $220. And since that point has had a couple of periods of consolidation and trended higher again. But what you can also see when we drill down into the 30-minute multi-week chart is once it gets a little bit extended over a 2-day period, and it has a resistance level, it has some pretty nice pull-ins. And that's all we need as intraday traders. It doesn't really matter to us if a stock's in a longer-term downtrend or a longer-term uptrend. It matters to us in a sense that if something's in a strong longer-term uptrend, we are not perhaps going to look that often for a down move intraday or an outsized multi-ATR down move intraday. But once something that's in a strong uptrend starts to move sideways, that's kind of the bread and butter for an intraday trader where you can capture moves in both directions. So right now we're looking at a 30-minute chart last couple of weeks. And what you can see is the stock moved very strongly from $240 to $255. And the next day it gapped up, found some resistance above 260 and had a nice pullback into the mid 250s. A couple of days later, right back up where it had failed the 2 days before, very strong down move into the 250s again. Coming into today, you can see broke out from that prior resistance level and went up to 275. This was actually the Fed day where it topped out above 275, I believe. Came off really hard into the mid 260s. And then yesterday, again, on the open was gapping higher, but it was sold at 275, 274 again, showed some weakness, pulled into below 270. So at this point, my thought process is, okay, well, we have some resistance. The stock has just moved up from 240 a week ago up to the mid 270s. 2 days in a row, the stock was sold in the mid 270s and had two pull-ins. So I put it on the game plan sheet and you can see here are the notes. 275 is R2 on the sheet. That's where I noticed it had failed the prior 2 days. And so what I want to see in this case on the open is I want to see the stock below 270. That's why I've circled the inflection point. Inflection just means, in this context, that right on the open, if the stock is above that inflection, perhaps it'll go to R1 or R2 and it'll have a quick intraday pop. But if it's below that inflection on the open, we can look for it to pull back into the support levels, S2, potentially S3, depending on how it behaves in the first 30 minutes or so. On the open, the first move was a little bit of a pop, and then a failure, and it got below inflection. And what you can see is this blue line that I show here, they're selling at VWAP. So I actually spoke to one of the younger traders on our desk, one of the younger, harder working, successful traders on our desk, Justin, who some of you may know. And I noticed pretty early that he was shorted. And so I wanted to pick his brain a little bit because it's always good to hear from someone else. I shared with what my thought process was, why I thought potentially was setting up as a good intraday short, and the levels that I shared kind of based on my experience on support and resistance levels. As many of you know, I've said over many times on my posts on Twitter, on my videos, that there's no more important concept for short-term trading than support and resistance areas. These are areas where there's supply and demand for a stock, and how it behaves at those areas will inform kind of what is the next direction potentially going to be for that stock. So Justin said to me, one of the things that he said that overlapped with what I just said to you was he noticed that they were selling at 275 the last couple of days. So that was one thing that put it on his radar. He said also the fact that over the last few months it had run up from $150 all the way up to 270. This is a very big move over a multi-month period. And then he had this other thing which I wasn't aware of, which I actually I'll share with you and show it to you right now, which was he noticed right around 940 that one of the weakest, or if not the weakest sectors, was SMH. So if you look at the sector rankings scanner, this is from our platform, where one of the traders actually did a list of sector ETFs. You had to go really all the way to the bottom of about, I don't know, what is there, like maybe 30 different things on here. And the second from the bottom is SMH. And so he noticed that SMH was weak, Nvidia chipmaker in that sector. He noticed that Nvidia was showing relative weakness to the Qs. Qs were kind of flattish. And actually on the sector ranking, you probably can see the Qs are right around flattish, slightly negative. So a lot of relative weakness. And so at that point, he started using not the VWAP, but the 2-day VWAP, where he noticed that it was holding below. You'll notice on this chart that we're looking at right here on the VWAP from today, that before the market opened, I put 268 as a potential support as S1. Very quickly on the open, it traded below S1, down almost S2, and came back up. For myself, if the first move is down like this, and then it comes back up, I'd like to see it kind of failing at S1, holding below S1. And there's an extra layer here for some traders like to use, short-term traders like to use, is VWAP. And notice that you can kind of see these spikes here on the 2-minute chart where it's spiking up to VWAP, and there's sellers there. So this tells you there's a lot of people who are looking to short the stock today, use kind of the initial weakness, and then VWAP is kind of as a potential area where they would have stops placed if it started to hold above that blue line. And so it's behaving pretty well, is what we like to say from a trading perspective. So it retraces back up to S1 into the VWAP level. It's being sold there, and eventually starts another down leg where it comes into S2. Does retrace very briefly back up a little bit here, still below S1, so no worries. And then if we go and we look at and we zoom out and kind of what I call the drilling down chart on the 5-minute, what we can see is, and this is marked up with my notes from the game plan, I have highlighted 2 areas from how I think about it and how I like to trade this setup. Right on the open, you have the initial failure, very quickly is below inflection. That is your first point where you can short it, below 270. That is kind of momentum. What you want to do at that point is see how does it behave at S1. Notice that there were some buyers there at S1, but that the pullback, the retracement from S1 is pretty shallow, still stays below 269. So at that point, you're not worried really about it changing directions. And then point 2 is when I see the follow through on this initial downtrend where it comes into S2 here. And by the way, I should say, I'm not at this point married to the idea that this stock can't go right back up to inflection. But what I'm thinking is if it goes down close to S2 and cannot hold above S1, then that's further evidence to me that it actually could trend down to S3. And that's all I'm really looking for is kind of a move from inflection down to S3. This is a bigger picture, but very strong stock. And I'm not looking to say magically, this stock just went up 100%. I'm going to today, because it's shown a little bit of selling at 275, capture this massive, pullback to $220 or something. In fact, I think I'd mentioned in a weekly review recently, somebody had said, they'd blown up their account, and young and experienced trader short this stock. And I would imagine, I didn't question them as to how that happened, but I would imagine, the way that you blow up your account if you're short a strong stock is something like you're short it on the day that it broke out from 240. It had failed at 238 to 240 over a course of a couple of weeks. And on the day that it breaks out from 240, this is usually how it happens with an experienced trader. They're like, oh, I'm going to short it at 242. I'm going to short it at 245. The stock ends up going at 255. And the next day gaps up above 260. Boom, blown out. You can't really, on a stock that's, in a longer term uptrend, when it consolidates and breaks out, be shorting it. And you certainly can't take it overnight on a swing position because the buyers are in control at that point. The time to short something like this is it runs up a lot for a couple of days. Maybe it gaps up one morning. You see where it fails on the gap up. That's one way. Another way is the way that we did it today, which is we saw it selling at the prior 2 days. It's lost momentum. So a lot of the kind of swing traders, momentum traders, if it shows weakness on that third day, they'll start hitting the bids. People will jump in on the short side. And before you know it, you'll get a nice intraday downtrend. So going back to my markup here, I'm drilling down. It starts to hold below S1, and then also I showed you the VWAP earlier. That's the second point where you can actually establish a larger position, because when you're doing a momentum position at the beginning here below 270, it's just you don't have that much information. So it's like you could put on a quarter position, maybe a half of a position. You could put on a full position once you see it being sold. It goes down, retraces up, you're seeing it sold here, and it's spiking above, but it's spiking back to VWAP. It's not getting above 269 or anything. For stock like Nvidia, which has a $9 ATR, it's not a big deal. And so you can start building into a position here as it's moving sideways, 5, 10, 15 minutes. And if you wanted to wait to have a full size position, I don't like to do this. Somebody actually asked me on Twitter, like, how come you're not adding down here below S2? Well, it's just, to me, risk to reward. This is one of the strongest stocks in the market. I'm not thinking this is the day that it's going down $20 or 2 ATRs or something like that. There's no real catalyst. It's just a relative weakness play to the market overall, to the Qs overall. And, maybe I capture a move from inflection to S3 or even more likely for most people, S1 to S3. That's still like a $4 move, $1 of risk. That's still a pretty good intraday, risk reward intraday trade. And I think what I'll wrap this up in is just, going back to this point of we're intraday traders. Like, this is a really strong stock. I can capture moves on the long side. I can capture moves on the short side, because that's the nature, that's the advantage of being an intraday trader. But what I'm not going to do is I'm not going to be thinking I've just caught the top in this stock and it's going down and I'm going to capture a $50 move. There are things to look for that. And, that would be maybe it drops 10% in a day on massive volume. Then I say, wow, something's changed here in Nvidia. Maybe this is the beginning of a reversal of the larger uptrend that we've just seen over the last few months. And at the same time, every once in a while, you'll take one of these trades and maybe some news will break. The government bans chip sales of Nvidia to China or something like that. And the stock will close below 260. Then, okay, that'll catch my attention. Went more than a full ATR move, something changed, whatever. But you need to see a lot of evidence when you are looking for this bigger picture swing trade in the opposite direction of a larger picture recent trend. So hopefully you learned a little bit today of like stock selection, when to look for, a short trade on a bigger picture strong stock, and understand that take what you can, you capture a half of an ATR, you capture 3/4 of an ATR. That's good without fresh news, just a technical setup. Take that, take the win, and move on to the next trade. Hope you learned something. See you next time.
So you're an active trader, not doing as well as you want, not doing as well as you deserve, and you just can't figure out why you can't become profitable no matter how hard you try. Well, let me show you why. This is your competition. The traders in this room. This room right here is full of elite traders. Some of them are making 7 and even 8 figures a year. In fact, our top guys have made nearly 20 million each in net trading profits in a single year. Let's head to my office so I can share more. So you're probably used to seeing videos of lavish trader lifestyles, trading gurus trading off of a laptop for an hour a day, heck, maybe even 15 minutes a day, and then them relaxing on some secluded beach for the rest of the day. Well, all I can tell you is that our traders train like pro athletes. They live and breathe the markets and are continually working on their trading skills. Because at our firm, That's what we found it really takes to make it in this game. I'm Mike Bellafiore, co-founder and managing partner of SMB Capital, one of the world's top proprietary trading firms located in Midtown Manhattan. And we're always looking for trading talent to hire and develop. And not just to trade in-house on our desk, but also to trade from their own home, entirely using our firm's capital. And we have numerous traders doing just that, allowing them to make upwards of 7 figures trading the firm's capital without risking their own money. But to even get a shot at something like that, you need to have the right training. That's why we're doing a new free online presentation in which we share how you can get an interview with SMB to become an in-house or remote trader, trading firm capital without risking yours and gaining access to all of our firm's coaching and resources. And the best part, you don't have to be a profitable trader yet. In fact, we prefer to mold profitable traders with our methods and our techniques. That's why we have just 3 simple criteria that can earn anyone an interview. We're looking for highly ambitious and determined traders who fit our culture first and foremost. So if you believe that could be you, sign up for the free 1-hour online presentation by clicking the link that's in your top right corner of your screen now.